Добрый день, нас слышно отсюда?
Да, слышно.
Okay, guys, let's start. Nice to see that some people are in class. I know we have an echo. We'll try to talk slow.
Survey was turned them on one of the computers.
Yeah, there will be still a slight echo because I'm talking, but if you switch off your microphones and sounds at your laptops, that would be easier, would be better.
The main echo comes from the computer of Yefimtsev Alexander Leonidovich, I believe.
Yeah, there should be only this one. Ребята, у вас там включены какие-то на ваших лаптопах еще звуки или микрофоны? В классе?
Нет, больше нет.
Вот сейчас я очень хорошо вас слышу. Ну, в общем, на ваших компьютерах должны быть отключены микрофоны и спикеры. Но то, что мы говорим, видимо, будет вот таким некоторым эхом. Guys who are online, who used to be online here, was that always such a sound? Such a problem?
No, it's really okay.
It was okay? When you were talking, when you talked, did you have an echo from the class? Last lesson.
No, everything was fine.
Just a second, I'll check.
Что?
Okay, the IT, yes, there is an echo. IT guys will come and try to fix somehow to make it better.
There is much
So
IT guys, just someone has to turn off the mic on the computer in the. Sorry.
We can't hear what we're saying.
So the three people who sit in front of the camera, all they need to do is turn off their microphone, and then there will be no echo.
But they will then can speak.
They will be able to speak when they will be asked a question, and if they
Okay,
trigger on that.
who is talking now? Who am I talking now? С кем я говорю сейчас? Кто?
Наденский Андрей.
Андрей, давайте подождем IT-гайзов, пусть они сами делают. Слушайте, пусть они там нам подсоветуют, кого чего отключить. Ладно? Okay, so now let's just check the exercise from tutorial 4. The last one. If somebody can remind me if you started that or we didn't even start. Anel, do you remember?
Can you please say it again? Because
Sorry?
I have some internet troubles, and you sometimes
Just who remember, did we start to solve the exercise or we need to go
we
from
just
the very
we just looked at Asselbeck's solution.
So did you check with him?
Yes.
Did you try? Who also tried? Just raise your hands and write in chat. Who made you try? Just write in chat if you succeeded to solve the task from tutorial 4. Or raise your hands in class. Guys, I can't see you. There are 3 of you, right? Or more? Just 3? 4? Can't hear. Asselbeck, are you here? No? Asselbeck is not there? Okay, I can't understand. I see 3 persons. There are more persons. Just write to me in chat that there are more persons. And guys who are sitting in class, please write your names. Just send me kind of list of yours, okay, to the group chat, so I know who are who attended today. No, you can do it later. You can do it later. Oh, it's up to you. I mean, just a second.
Так, работает, получилось у вас? Нету протеха? Отключили ноутбук с микрофона? Не подключены, да? Тогда не должно быть эхо. Камера есть, все есть. Эхо.
Вот когда я говорю, идет эхо. Вот сейчас вроде бы меньше.
Мы не слышим, да, сейчас вроде нету.
У нас микрофон включен.
Ну, небольшой есть, но не должно быть сильно. Если
Ну да, все микрофоны на компьютерах должны быть отключены.
Все, у вас нет микрофонов. Значит, нормально. Лучше не будет.
Ага, окей.
Микрофон выключен, все.
Ну давайте попробуем. Окей, thank you very much. It's better, guys. Okay, so no, Alia, how is it? Better? No echo? Okay, let's try to. So I don't see in chat that anybody made this solution. What about Alia? Did you try to make an exercise to solve the exercise?
From tutorial 4?
Yes, that we discussed with Asselbeck.
Yes.
Huh?
Yes, I have uploaded my solution in Teams.
Yes, can you share with us? And again, did you have the same answers as Asselbeck or something different? You didn't.
I didn't see the aspects.
Okay, because may I ask you, Aliya, if you can share your file, I'll give you rights and explain what did you do, show us, and the others will compare. Just a second, I'll give you rights. Okay, Aliya, are you okay?
Yes, I'm trying to share my screen.
So while you will be talking, so explain your way of thinking, and we will need formulas. Guys, on the way when we discuss, I would ask you to screenshot or just to upload the screenshots in the chat of some formulas that are useful for this exercise. So, Aliya, ready?
I'm sorry, I guess my internet connection is poor. So
Okay, then Aliya, maybe then we will ask the other person, and you will just be ready with the formulas. Try to pick up the necessary formulas for this or that step. Okay, and send it to us to the chat so we know on which formulas you were basing. Daniil, how about you? Did you do the exercise?
Yes, I do.
Yeah, can you share with us your solution?
Yes, 1 minute.
Yes. Did you compare? Have you compared with Hasselbeck or just did yourself? And
No, I didn't see what to do Hasselbeck.
Okay, then let's see what was your what your results have you got, and on the way we will discuss the formulas that are applicable and definitions, because we need to really not just use the formulas but to understand the meaning. Ребята, сейчас лучше слышно? There's still echo. So let us see, do you have here the task itself? So task description, or just you can remind us? So that's about the comparing several companies, right? So investment decision.
Yes.
So we need to make a choice to which portfolio to invest. And we're going to plan based on the daily information, daily returns, right? So you can find, it's in your group, probably. If you upload it to the group, then it's your group.
That is our task. And my answers.
So the first step is step by step, and your results. So first, what did you do?
I'm estimate the daily return. Apple was first.
What is that daily return? It's just daily return in dollars or what?
In percent.
So how we call it? Because daily return is in the upper schedule. So 94 is daily return basically. But this is how should we call more properly. Daily return. What? Rate.
Daily return between 23rd February and 22 February.
But return, it's a value. But rate, it's more proper word for that. Agree?
Yes.
You see? So that's why let's better call it daily return rate, because daily return it's 94 for 23rd of February and so on. You see? The return is value, the rate is percent or the ratio. So what? So you found the return rate, let's say. And what next?
I'm sorry, I'm very bad hear you.
Okay, just continue. So, do you continue? Daniel, are you?
Yes. What was question?
Just continue your explanation. So we need to name. We on the way we verify our terminology. Okay, so we better feel how to properly name the figures.
Okay, I'm estimate the daily return between two dates. For example, my first means it's mean between 17 and 18 February. It was 1.89%. Next means was between 18 and 19 February. It was 0.2 and 2.
We see the screen from Teams.
And now?
Yes, yes, better.
It was unprofitable days, but next between 19 and 22 February was profitable.
Or profitable.
Yes, and the daily return of stock was 0.87.
Again, better name, Daniel, better name it daily return rate, because the return is value again, right?
All right.
It's more correctly to say that. You can say that, but then it's not clear.
Next date was between 22 February and 23rd February, and it was unprofitable, and this mean was 2.26%.
So the next, so you did that the number 2, then what? Okay, just continue. Go further, step by step.
Next was Boeing, and first date was between 17 February and 18 February, and it was profitable daily return.
Sorry, Daniel. Daniel, I have to stop you. Daniel, guys, is it only me who have problems with hearing Daniel? It's only me? Or you also have problems?
I can hear him.
You hear him well? without interruptions?
Yes, we have. Well, yes.
Okay, then, of course, I experienced problems. So let's, Daniel, go through without my interruption. Go through the steps, and we need to see formulas that you applied there. Not formulas of Excel, but the formulas from slide, and that to explain how do we calculate. Okay, just don't go through each cell explaining. Go through the logic. Okay. And guys, please, if you need to note the formula that we applied from tutorials or from lectures, please make us just upload that to our chat, so we know what the formulas were most useful here. Okay, you continue.
Next date was between 18 February and 19 February, and it was an unprofitable day, and mean was 2.05%. Next date was between 19 February and 22 February. And
Daniel, once again. Daniel. Daniel. Once again, we don't need each cell to be explained, okay? Each figure. We need the whole logic. So step 1, step 2, step 3.
Step 1, you need a formula, yes? I'm sorry, I don't hear you.
Your sound is off.
Yeah, I know. Just because I have problems, I decided not to interrupt the Daniel. So the formula that you applied on the slide, can you refer to some slide with the formula? Navy, can you
well, yeah, the formula is just a P underline X, which means that the first day of the price minus the second day of the price of the second day, which means P underline X plus 1 divided by the price of the second day, P underline X1, and you go further until the last day.
Yeah, that's for the okay. That is what you found by that.
What do you mean? What I found by that?
So by this formula, what do you get?
You get the estimated daily return of each stock. For the day between day 1 and 1 plus 1 P.
Okay. Okay, just on the next step, they're going. If you find the formula from the slides, you can just copy paste the screenshot as well. But tell me, Navy and other. Step number 1. We have these differences. How we can call that in corporate finance terms? The difference between the days. What did you explain? Daniel? Navy? So did you say that in step number 1, you took the difference in returns, right?
Yes.
Between the days? How we can call that in more professional terms? The difference in the mathematical term.
The performance between day 1 and
difference in more corporate finance terms.
Oh, okay. You need a keyword. Okay, all right.
First of all, we can call it
P.
variance. Can we call it variance? Right, guys.
No, of course not. No.
Right, so it's more professional term. So you got variances, and the second word which we use in formulas. So what we get?
Wait. No.
When we have differences between the days and returns, we call it what? These differences, we call it
Deviation.
Absolutely, absolutely.
Oh,
We call it deviations. So that's important to understand. So when you recall what you did, so your logic, try to use the professional terms, okay? Okay, so we understand. Yes, so Daniel, please, sorry, continue. Just step by step, 2, 3, 4.
Okay, a deviation between next dates, 22 February and 23rd February, was unprofitable, 0.41.
Daniel, not each cell, just the next step, please.
Next point, next task.
No, next step.
Next step.
You're discussing each cell. Таня, вы говорите, у меня прыгаете по каждой ячейке и показываете мне, мы и так можем прочитать. 0,4.
Да, я понимаю, но они же все одинаковые, я не понимаю, что я должен объяснить. Они
Второй шаг, третий, четвертый, вы же решаете задачу, вот расскажите, как вы решаете. So you solve the task. Just go through the whole solution of this task. See, we compare these, then we do that, and here is we see the maximum, here we see minimum, and so on.
But in the every point, one formula I use one formula, and every my step.
Okay, which formula do you use?
Between two dates, I'm.
Okay, we see this. Then next, what you did next? Okay, we have a daily return rates. Then, what do you have?
I'm got a result in percent. Between every dates deviation.
Why you need this percent? What is telling?
This percent, it is the daily return of each stock in this date.
Okay, then what?
Then we can understand about profitable every company in these dates.
In the range? Then?
The range is 1 day or 3 days.
So can you please switch on this screen, the Teams?
Yes.
So what have you got? In step 2, what do you do, and what have you got?
I got the daily return of each stock. For example, about company Apple, I got that deviation between 70 and 80 February was unprofitable, and this means that in this date company was unprofitable.
Okay, let's go on. We need to solve the portfolio thing. Даниил, давайте, ускоряйтесь.
So I understand that in this period the expected daily return in the Apple was unprofitable, in the Boeing was profitable, Coca-Cola too profitable, and Nike very profitable, the higher percent.
So where is the highest, the lowest risk?
High risk, it is Apple, but lower risk was Nike.
You think the highest is Apple?
Yes, because in these dates, expected return was unprofitable, but Nike was profitable. So if we estimate the risk of this stock, we understand that Apple more risky than Nike.
Which figures do you compare? Can you point that? And
I am for the risk.
Mm-hmm.
I am got through this meaning.
Yeah, I see. In point 2 or 3. So when you really conclude, on which figures are you basing on? Okay, what's the difference between this estimate risk? You see Apple,
Yes.
just close 0.12. Boeing is 0.15. How do you compare between them?
Between Apple and Nike?
Apple and Boeing.
Between Apple and Boeing, we can see that the risk of Apple more than Boeing.
So risk of Boeing is higher or lower?
Lower.
I don't understand. So guys, do you agree that with that conclusion?
Oh no!
That
Oh no!
Risk of Boeing
sorry.
is closer.
The risk of Boeing is higher, of course.
Yes.
Yes. But Coca-Cola and Nike much lower.
Okay, so if you range, so the highest will be still whom? The highest will be
The highest will be Boeing.
Boeing, absolutely. So no Apple. Andrei, what is this formula for? What are you asking us? Andrei. Which formula are you asking about?
The one above.
The one above we've covered already. That's the formula. Navi, can you explain what did you use this formula for?
This formula was for the estimated daily return. The first task.
Daily return rate.
Yeah, it's the daily return rate in percentage, which says that you have the first day x for the first day minus x p underline x plus 1, which represents the second day, divided by p underline x plus 1, which is again the second day, and then you have the daily return in percentage. And you can do it for the second day, then you put the stuff in the second day, third day, fourth day, and so on.
Gotcha.
Okay. So next, so how did you make your decision?
Next, I am estimate the return of two portfolio, and return first portfolio was unprofitable, but return second portfolio was profitable. So And risk for first portfolio was higher than the second portfolio. So I conclude that the first portfolio better because return.
First is better?
Yes. No. Of course, portfolio second is better because return profitable and risk less.
If you see return negative, should we at all talk about the risk? Tell me. What do you think?
We can.
Doesn't matter.
No. If return is unprofitable, risk very high.
Negative.
Negative, yes.
Yeah, basically, if you see no return, the negative return, we are not interested, right?
Yes, of course.
So it doesn't matter which level of risk do we have so much, right? Until we just don't want to receive the negative. So in fact, that is more applicable in situations where we compare different options with returns, with positive returns, right? Then we need to apply this risk factor more. Here you don't have several options to compare, but basically you need to consider these both parameters when you're talking about the profit, right? Because we are not aiming to receive losses, to lose money. And okay, thank you very much. Everybody understood? Any questions on this? No? You have, I think you had the same results, more or less. Let me ask you questions, like just to remind what we've covered in previous couple of things that we covered in previous seminars. About the rate, the discount, the rate of return. So tell me with which rate, real or nominal rate, would we apply to the project, cash flow? What is preferably to be applied, nominal, and what's the difference between that? Oля? T? Did you want to tell?
Yeah, I think it's the difference in terms of inflation rate. So the nominal return is without the inflation rate, and the real one is
nominal return is without?
Is with, and then the real is without.
So do you think ideas how we can get the real rate? If you ask, okay, then we need to take real rate and add inflation. We know how to get inflation from, right? We have different sources of information, right, per country. But how to get real rate? What is that basically?
I think it's we calculate the NPV.
The real rate of return, on which NPV is calculated. What is that? Any suggestions? What is that real rate? How to get that? Diana, any suggestions?
Well, probably just nominal rate minus inflation rate. So the most simple.
So how to get nominal then?
Oh, okay.
To me, it's easier to take real rate to add inflation, then I get nominal. So how you get the real rate from? I'm fine, but give me the source of data. So what is the definition of real rate? Okay, I'll give you 1 minute, just Google it or just go back to your lectures and try to feel the real rate is based on what? Rate of what? So, any ideas? So, the real rate, what is based on? How we can know from where? What is that, basically? So, I want you to talk content, not to talk just formulas, okay? So, what does it mean, the real rate? Where do you take it from? Any suggestions? Guys, offline, I don't remember who is sitting there. I see that your microphone is switched off, but maybe you can tell something. You can speak up in your computer or just switch on microphone in class. Girls, any suggestion? The real rate is based on what?
Are you talking about the formula?
No, I'm talking about the nature.
It's time preferences on stocks. Come on. Based on
Okay.
time.
I think that in real rate we take into account inflation.
In real rate, we don't take, as we now discussed, real rate is without inflation. So it's rate of what?
Well, it's like interest rate that we pay when we borrow money from banks.
So basically, guys, it's you need to discover. You see the exact definition, but this real rate from which we start is based on marketable securities, the most liquid assets that we have, right? Most secured assets that we have. So that's why we start with the most secured returns that we can achieve. Okay, be healthy, Olga. So first we start, that's why it's base rate, the real rate based on marketable securities. And that's minimum, with minimum risk. What does that mean? That is the rate with which we can get returns with the minimum risk possible, like, right? Because it's the most liquid asset, it's high secured, and so on. So we start from that. That is the real rate based on marketable securities and so on. Then we add the inflation, and then we get the nominal rate. So, but we talk about the minimum risk safety rates that don't consider any administration risk or industry risk or some doing business risks, okay? So just the money gain. So at the later stages, we need to discover the risks and the difference in risk, because this is like a minimum safety returns that we can achieve, the most secured ones. You understand now what is the basics, right, for that? So when we apply that to the projects, it's not enough for us. So for the projects, let's again remind us which rate of return we apply better, real or nominal?
Well, not.
Guys in class, can may I ask you, so for the projects, more applicable, more typical to apply is real or nominal rate of return? Or preferable?
Maybe the real rate.
Real, right?
Yes.
Without inflation.
Yes, it's adjusted to inflation rate.
Not adjusted, basically. It's net off. Okay,
Yes.
it's just the real rate of marketable securities and similar high liquid assets, right?
Yes.
No any adjustments. So basically, if you need nominal rate, then we add up inflation. We add to it, okay? Better.
Yes, it's cleans of inflation. No inflation.
And so we'd better apply real rate to which kind of cash flow? With adjustment, with inflation or without inflation? So real rate without inflation should be applied to the cash flow. What happens with inflation, including or excluding? Huh? No suggestions? Navy, maybe you try.
So maybe if we Navy go.
No, you can say. You were the first one.
No, you say it.
Yeah, okay. I would say without inflation, we will just calculate it normally. The cash flow.
So if you have a cash flow with including inflation, can you apply real discount rate to it?
Oh, no, you have to exclude the inflation first, and then.
Exactly. From where? From where to exclude inflation?
From the cash flow itself. If the cash flow includes inflation, then you first have to exclude inflation itself, and then you can apply.
That's a good point. Yes. Yes, Navy, I like your idea. So you first need to adjust the cash flow itself, right? Get its net of inflation influence, and then to apply a real rate. That would be really great. And that is how typically you're supposed to do that for real project. Because when you come to real enterprise, people quite often just provide you, basically they provide you with the cash flows, their understanding. And that might be that inflation, they mean inflation, that's included. So you need to ask, is included or not? If included, then it's nominal, and then you adjust. The second way is this easier way, they like for exercises, for test exercises, just to solve the task correctly. If you're given nominal cash flow, then apply which kind of rate?
Also nominal.
I've lost you.
I said also nominal.
Yes, because you adjust your rate to compare apples with apples, right? Then you check your rate. Do we all understand there is no much sense in adjusting that to nominal, because anyway we will exclude that, right? We increase the real flow, real cash flow on inflation and get the higher one. Then we increase our discount rate as well, and anyway we get that like freed at the end. So just not to spoil this and to avoid extra unnecessary calculations spoiling the picture, nobody applies, try not to apply nominal rate. But again, for the test on Friday, if you have a test and you get this exercise, you can do this, simplify the issue, okay? You can just apply one-to-one. Okay, let's go back to okay, and another just a reminder to refresh. If I invest in bonds and I come to you and say I got $100 to invest in bonds, how would you explain me as a consultant? So what I would earn? So how to calculate how I will earn my money. Can anybody explain the yield on bonds that I expect? So I'm coming to you saying, this is my $100. I need to invest that in 6 years. What? How should I consider the calculations? How much I'll get? Diana, can you help me? Consult me. Yes, Navy, you want to start? You want to tell?
For investing $100, you get a certain amount per month. Then you first of all.
I can hear.
Oh, can you hear me better? So if you invest $100 for 6 years in a bond, then first you will get each month a certain amount for your investment. Which means that if you want to.
How we call it?
Discount.
No.
Or sorry, it's more in German. Present value.
No. What do we get back on the coupon?
Sorry, coupon. You get a coupon. You get a coupon. And each
how do we
month,
calculate coupon?
Discounted by the interest rate. Sorry, no, you get for the coupon interest, and you just have to, for example, 7%, you take $100 times 0.07, and then you get your coupon.
Maybe, can you just explain to me? I have a bond. It has its value 100, right?
Yes.
So, coupon is like you say 7%. So, should I apply this 7% to which value?
To the you apply the 7% coupon interest to the $100 first, then you know, okay, I will get each month.
Bond, right? To the
bond
the face
value. Yeah, the face value.
Okay, the face
then you know,
value.
okay, I will get for 6 months the same amount of money back because of my investment. You discount it, and at the end of the month you have to take the $100 again into account because you get the $100 back, plus
because I sell it out, right?
Yes, plus the 60 plus the coupon itself, and then you know if it was worth or not. If it's over $100, then yes. If it's below, then no.
Then tell me, when you told about discounting, should I sum up all my 6 years returns over coupon, the coupon values, and then discount, or?
No, first you discount each month to bring it in the same timeline, which means in the present, and then you sum up.
Okay, so I need to discount individually, annually, right? Is that what you mean?
Yes, annually. Yes, that's.
Yes, that's very important that we discount annually, individually, right? Each period, and then we sum it up. And okay, I got your idea, and just a second. Okay. Then when I sell out, I can decide maybe sell a little and reinvest or something. So if we split the cash flows, if we talk about these returns, I would apply two kind of approaches. First, I would probably say about calculation of returns over coupons, so the coupons, right? The coupon flow, and then the sales of bonds. These are different flows, right? By the aim. So I would recommend you to split these flows. Though in formula is more mathematical, right? It applies just per period. So in your formula, in the last period, you get these both flows mixed, right, in one. That might spoil a bit the picture. That's why in corporate finance, when we planning, when we discussing the business issues, we always try to separate flows, and that will be more clear, right? What's going on at the end. So you say, I will generate so much coupon yield from the coupons, and this will be just the sales of my bond at the end, right? So return over. Okay, so then let's go to the other exercises. Anybody tried these exercises 5? I will share. I will remind you, and please write in chat if you've done this. We need now to talk about the probability of the payoff that we can expect. So there could be risk and could be probability. The very important parameters that we need to consider. Anybody did that?
Which task is this? I never have seen this.
It's tutorial 5. Olga, did you do that? No? Anybody?
I'm sorry, probably that's not what I saw. I tried to find it. Give me a sec, please.
Yeah. You have something different?
Yeah, me too. Task 1, the market currently yields a return of 10%, whereas treasury bills yield 4%.
Okay. What task did you do? Can you share with us?
That's the thing I haven't done the 5th tutorial.
You didn't do the 5th tutorial? You didn't try, did you? Who tried? Anybody tried? Girls in class, have you tried to do this 5th tutorial or not? Huh? Nobody? The 5th tutorial with probability. Did you do these tasks, Navy, right? Is that what
no, I haven't began with this task because it's tutorial 5, so I thought it would be next time.
Okay. Then we have the exercise. Just I showed you this. So nobody. Let's do it now. Okay. Then try to look up through the lectures and files. I will share the tutorial file. You basically have it. I will just leave it here, and you have it in your in the common folder from the lectures in the files. There is tutorial 5 and the Excel file. You can find it there. Let's take 5 minutes and try to do this. 5-7 minutes and try to solve it and check up. Okay? Take your time. Ребят, вопросы, да? Any questions or so? What? We're now solving this task. Ah, sorry, I'm okay. We're solving this task. With the use of slides, so try to look at your lecture 5 slides and find the advice there. Anybody have finished? If you finished, just write in chat the plus that you finished, and if you got 3 pluses, we start to compare 3, 4 pluses. Okay, you can. I think you can see now, can hear me now. Standard deviation is also, we are interested in that, right? So, please, those who finished, write pluses or your answers, or just pluses in the chat, and we'll start checking in a couple of minutes. Anybody finished? Diana, have you got the, have you finalized, or you need more time?
I haven't calculated the variance and standard deviation yet.
Probably more time, right? Okay, probably more time. What? Excuse me, what did you say? Diana, can you please write down in chat? I have a break in my connection when you say. What did you say?
I was saying I haven't calculated the variance and deviation yet.
Should we check? Diana, have you finished?
We can check the first two, expected payoff and expected
Don't
rate of
hear what you are saying. Diana, do you say something? No?
Yes.
Yeah. Okay, you finished the first this task. Okay, okay, great. Can you share the screen, please?
I wrote the answers in chat and the solution too.
Diana, how is it going?
Can you hear me?
Yes, well.
I can explain my solutions in the chat about payoff and rates of return.
Okay.
We have 3 payoffs with different probabilities. So to get the expected payoff, we should multiply each probability to a certain payoff. So we get $100.
What about the standard deviation? Do you need to apply it somehow? I mean, do you need to reach it to understand? Did you calculate standard deviation?
Not yet.
Ah, okay. So you need more time, do you? Maybe somebody else did that? What? It was in class. I forgot your name. Sorry. Yes. Maybe you had done. No, you don't hear me probably. Those in class, do you hear me? No? They don't hear me. Okay. So we'll wait a few more minutes and we'll see somebody could share the standard deviation with us. Guys in class, can you switch off the microphone, please? They don't hear me. Or just let us know your solution. Did you finish, guys in class? Yes, the problem is that I don't want to speak with them. I don't. They don't listen, hear me. That's the problem. Okay, we'll have to. Have you finished?
I have applied my answer in chat. I have variance 20,000. And I just calculated it by the formula that I upload in chat. So it's just probability. Я забыл, как будет умножить. Sorry.
Что сделать? In mode of... Как
умножить. Умножить.
Multiply.
Multiply by our profit minus our net expected, expected return in power of 2.
Okay, and what does it mean? What basically you got? This 20,000 what? It's what does it mean? Can you explain?
Wait a second. I think well, 20,000 maybe it's really, okay, it's okay. Well, to explain variance, what does it mean?
Yeah, yes, it's 20,000. What is that in dollars, in percent? What does it mean? Just for me as an investor, you know, who is.
If I'm not mistaken, it's in dollars, and it's like our. I don't know really how to explain it. I just understand somehow, but it's hard for me to explain.
Okay, maybe while you are thinking, Olga, maybe somebody else can help us.
I can try.
Yes, Diana, please.
Variance means spread of our payoffs, I guess. And it means how much risk for an investor this project carries.
Mm-hmm. So risk in what? So that's a percent of what? 20,000. Maybe it's right. Just I just want you to develop a bit the wordings, the idea. Olga, can you try to make it more easy to understand for those who try to invest?
I'm sorry, can you repeat, please? I just have.
No. Yeah, just can you again repeat, take what you think and what Diana said and explain to me as a non-professional person, why do I need to watch this variance? What does it mean for me?
Well, for you, I think it's in dollars. It's just somehow measuring your risk when you enter the game. Like it's I don't know, an interval where you can get when you enter this game, like any profit from this interval.
Okay, so that's a value of profit, the interval of the profit that we can gain or lose, right?
Yes.
Or the playing. Okay, you agree with that, or you want to correct, Olga? Anybody? Okay,
I
fine.
generally agree, but I would say that maybe it will be more clear to say that it means that high variance means that we can get either higher or much lower payoffs than we expect.
The fluctuation is really huge, right? Is
yes,
that what you mean? Okay. Okay, thank you very much. So we have a couple of minutes to finish. So please do these exercises. Finish these exercises at home, and on Thursday morning I will upload the solutions, so you can double check with what you've got, and just refresh and be ready for test that will be during the lecture time. If any organizational problems or any questions about this test, you can send to. I'm sorry, I'm a bit sick. So you can send your questions to Elizaveta Igorevna. She's organizing that during her lecture. Then for next time, I will ask you, and I will send this task. I will upload this wording. I will write the wordings, but just to explain here, as you're supposed to be finishing your projects, please concentrate on the legal issues by the next time. What kind of legal entities you may have, either in Russia or the guys from abroad. You may talk about the possible legal entities in your countries, and what is the difference between the legal entities types, and also considering the difference and the influence on the financing decision, right? So different legal entities types may influence financing decision and your financing negotiation with the parties. So the next step and next question is, what are these parties? So what possible sources of financing, how you can finance your business, and what is the cost of this finance? What is the terms of finance? Is it possible to achieve, easy to achieve? So let's discuss the legal issue and sources of finance, cost of finance related to your project and project choice, okay? And how we would compose this will be like, some of you will be as if potential investors in the project, the others will be consultants, okay? So you're gonna tell about your project, your considerations, you think this and that, and then like your partners, just the other communicative team, they will give you the reaction, maybe some suggestions, maybe some critics, right? Questions, so that we like meet and discuss for what are the circumstances for potential investors could be. Is it clear?
Yes. Yeah, thank you.
Okay. Okay, then thank you very much for participation, especially for standing through this hybrid mode, which is really not an easy thing. Navis, thank you for your active participation. Tia and Olga, Diana, Aria, everybody. So I'll be here for a couple of minutes if you need to ask any questions, and then I will switch off and see you on Tuesday.
When will we present our projects?
Projects that I think I've written. You just need to check what I've wrote in your groups. That's all the information about presentations. These are the last 2 classes.
Thank you for the seminar. Goodbye.
Huh? Yeah, thanks. Thank you, Oля.
Thank you. Goodbye.
Yeah, thank you, Diana.